Let's see, Diane, thanks for being here. Okay, hi everyone, I'm Ronica Brown and I help business owners to increase their cash flow with tax planning and cash management strategies. And today I really wanted to get on to answer some questions. I've receiving several questions based on the lives and videos that that I've been posting, here on Facebook, IG, and LinkedIn. So I just wanted to take a chance to let you come on and ask all your questions, or I can also answer any questions that you may have. Also, so the first question I'm gonna go over is, it says my projected income for this year is 250K, but I only pay myself a salary of 40K. How can I figure out what to pay myself and still cover my taxes? Okay, so basically, this person is going to make 250K by the end of the year, but they're only paying themselves 40K, so forth. So they want to know how to figure out what to pay themselves and still be covered for taxes. So normally what you pay yourself is based on cash flow. So I'm thinking that 250K is what your gross revenue, and then is that 40K the only money that's left in your business? Are you taking distributions? So those two factors, because as a business owner, there's two ways that you can pay yourself. You can pay yourself through payroll, which is considered a normal salary, and you can also pay yourself with distributions. So I'm assuming that this means that all the money that you've used for your personal life is only $40,000 for the year. So if that's the only cash that you have after you've earned this revenue, it seems that you may be either you're not making enough, maybe you have some high expenses that you need to take a look at, or you may be having some margins issues, that what you're charging and how much it costs to provide the service that you're providing, that you're not making a high enough margins on that. So probably that's why you only have 40K to take in to pay yourself. If you have more money, if you have more money to pay yourself, and if you are let's see, say you're an S corporation, then I'll say that you can take the rest of the money through distribution. It really doesn't matter if you're an LLC, S corporation, or a partnership. It really doesn't matter how much money you actually take through distributions, because you get taxed on all what business makes. So whether you distribute the money or not, then you still have to pay taxes on it. So if you're keeping the money because you think that you're not paying taxes on it, and I know a lot of business owners made this mistake or think this, the key to know that is that you're still paying taxes on it, even if you did not take the money out and spend on your personal life. Hi Trisha, that's my sister, everyone. Thanks for watching. So if you're a C corporation now, then if you keep the money in there, then you only pay corporate taxes, and then you don't have to pay any capital gain taxes when the money comes to you. So it's never a yes and no question when it comes to this. Is just based on what's going on in your business. I'm saying that if you're only netting 40K, and if that's the only cash that you have leave after you make your 250, take a look at your margins to make sure that you're making the appropriate margins on the services that you're offering. Make those adjustments so that you can either increase your revenue, look at some of your expenses to see where you can also basically trim the fat on some of your expenses. Take a look at your subscription. That's what's eating up a lot of cash for business owners now, because they subscribe to so many software programs and so forth that sometimes they're not even using. So take a look at those expenses to see where you can get some additional cash. If you're doing business use of home and car, you can also reimburse yourself for those money, so that will give you additional cash. So if your deduction for business home use of home and car, it's like, say it's like $12,000 combined, then you can also pull that cash from the business, and you don't have to pay tax on it when it comes to you, when it comes over to you as a person. So you take the deduction on your business return, and then you get the money, then you don't pay taxes on that money. You don't pay taxes on the amount that you reimburse yourself for your business use of home and car. So that's also a next way to get some cash. I hope that answered your question, and still cover your taxes. So if you're paying yourself $40K, then you know that based on the state that you live in, you're gonna either look to put aside anywhere from 15 to 20%. If you're in New York and California, you know it's gonna be much higher than that, because the state taxes in New York and California is pretty much higher than other states. The next question is, which business entity is best for consulting business making 100K per year? Interesting. Which business entity? So if you are netting, that means after your gross income and all of your expenses, and you net anywhere from, let's say, 30 and up. So if you're making over 100K, I'm assuming that you're netting over 100K. That's the amount of money that you're taking home, not the amount of revenue that you have, because you can't have 100K in revenue and have zero taxes because you spent all that money in your business or somewhere else. So I'm assuming that this 100K is your net profit that you're gonna pay tax on. And if this is the case, if you're netting anywhere below 127,000, that's net profit that you'll have to pay taxes. And this is after you pay yourself, pay all your business expenses, and get all these other write-off. If it's anywhere below 127, then S Corp is the way to go. The thing with S Corp is that you have to be careful with your reasonable salary, because it does require you to pay yourself a salary as the owner employee. And how you determine that reasonable salary, you should be able to say how much you determine your reasonable salary. If you're running all of your income through payroll, this is the amount of income that you're paying yourself, then you don't want to do that, because you basically gosh, I don't even know what the word to use. You basically you basically eliminate the purpose for having an S corporation. So if you're running all the income that you're making through payroll, you're basically eliminating all the money that all the tax savings that you should have, because the thing that S corporation does is to reduce your self-employment taxes. That's pretty much it. So you don't want to run everything through payroll. You want to do either half and half, or split it based on your responsibility in your business. So I'll say that S Corp is the way to go if you're netting over 100K. If you're netting 60, 20, 30 after you pay off all your business expenses, then S Corp is still the way to go. If you're netting over 500,000, then it's pretty much then you pretty much have to run the numbers and look at a different structure for yourself if you're over the 500,000 mark. Charlene, let's see. Hey, Jermaine. I tried to get a line of credit with my bank, and they said that I didn't have enough income, even though I grossed over 200K last year. Can you please explain? Even though I grossed over 200K last year. I'm assuming that the bank look at your tax return, and I'm gonna tell you that a lot of banking rules and tax rules goes in opposite direction. They're probably taking a look at your tax return and looking at the write-offs that you take and saying that, and that's how they determine their cash flow formula to see if you're going to be able to pay them back. So what I would say is to do, or they should ask you for a pro forma financial statement for 2018, since you don't have a 2018 tax return. But if you wrote off a lot of expenses on your 2017 return, then that's pretty much what they're trying to see, how much cash you have, and they're factoring all those write-offs. So what you can do is do basically a pro forma, prepare a profit and loss and remove all the deductions that you did not spend any cash on. So if you're taking a huge mileage, home office, and if you're having depreciation and so forth, then you have to remove those before you, and of course you're gonna explain to the bank that you remove those, because how they calculate it is it's extremely different. So you're going to remove those so that they can see only your cash activities. So it's basically giving them kind of like a cash flow statement that shows only the money that all your revenue and all your expenses that you actually spend money on. So some of the things on your tax return, you don't have to spend actual cash on it. So remove all those items, give it to them with a copy of your tax return. If they don't want to take it, then you're gonna have to just find a new bank, because some banks are just way too conservative. Some don't understand taxes, to be honest. So you're gonna have to find one that is gonna be willing to work with you and basically look at your look at all your deductions and your tax return and the pro forma that you're going to prepare in a sensible manner, I guess, or in a different way. As I said, that their rules are pretty much, their rules basically collide with taxes. So you always have to make adjustments for things that you did not spend money on. I hope that helps. Let's see. Michelle, hey, how are you? The next question is, what's going on with the meals deduction in 2018? I am a realtor and I'm on the road constantly, so I will be losing that deduction. Any thoughts on this? You're on the road constantly. So under the new tax law, they mistakenly removed the meals and entertainment deduction for business owners. So you used to get 50% of all your business meals. So these are meals with your prospects, your customers, your employees, and basically meals that you can prove that's in the course of doing business. So it used to be a 50% deduction. And under the new 2018 law, it's a 0% deduction. So you're not getting any deduction for the meals. However, this question said, I am a realtor and I'm on the road constantly. So will I be losing this deduction? So you kind of don't get a meals and entertainment deduction for just feeding yourself. So if you're on the road and you decide to buy lunch, even before 2017, that was not a deduction because they feel that you have to feed yourself regardless. If you are meeting with an ex realtor or you're meeting with a client and you purchase lunch for the client, then both those lunches would be deductible. But it's still, I've heard that they're going to fix it and that Congress did not mean, they want to be pro-business, so they did not mean to remove the meals and entertainment deduction. I'm thinking that the IRS love that they remove it because, you know, trying to prove that a meal is business and so forth is just was so cumbersome. So this is still pending. It's still not deductible for 2018 going forward. We will have to see what happened towards the end of this year, going on into next year, to see if there's anything that that they're able to do to reverse that. But from what they have said under the new tax law, that they really did not mean to remove the meals and entertainment deduction, but it's gone. What I will say is still keep track of your meals. Still keep your documentation for meals over $75 and more. And if at last minute they decided to fix it, then you will still have your numbers, you will still have your documentation. But when you're looking at how much, you know, your estimated taxes and so forth, just know that so far, you know, your meals are not deductible, so you don't factor that into your deduction. But continue to keep it, keep track of it so that you will be able to throw it back in just in case they decide to go ahead and reverse that and have you deduct that. Let's see. Carlene, what's up? I am a stay-at-home mom and I'm starting a coaching business. How can I figure out how much of my fees will go to taxes? How much of my fees will go to taxes? You're staying at home, so I'm assuming that you don't have a lot of expenses. Your overheads expenses are probably pretty low, and it looks like you're just starting, so you're going to be the only person that's in your business. I mentioned before, anything from 15 to 25%. Make sure that you go ahead and elect to be an S corporation and try to get some information on the rules with, you know, the salary and so forth. Hopefully you're not in a state that is state taxes are high, so you should, if you're able to put aside 15 to 25% every month, then you should be covered. Then at year end, before December 31st, go ahead and get someone to take a look at all your numbers to make sure that you're paid in, so that you don't pay more than you needed to pay. So you're going to make the adjustments for December, then come in January, then you'll file your tax return during the April tax season. If you're living in Georgia and you're a business owner, you do not want to overpay on your state taxes because they take forever to give you a refund. So make sure that you check at year end that you're good with your estimated taxes, that you're not paying too much. So you can do this around the beginning of December. And that if you had already paid so much in, that you don't have to pay anymore, because you don't want to send them way more money. The state of Georgia, to take forever to issue you a refund, and you know that you need money in January for marketing and all those coaching and all those fancy stuff that we like to do as business owners, or to go on a mastermind or some trip, or and so forth. Let me check to see if I see any other questions. So everyone is having a wonderful Friday. Oh, No, I am. Let's see. What's the question said? Oh, someone's trying to be a little nosy. No, I am pregnant. No, not last year. It's in my tummy, not my face. So that's why it's not showing on my face. That's funny. No more pregnancy questions, please. Okay. But that's it for today. Thank you guys for joining me. I will look out for the people on LinkedIn that have some more questions. Too bad I can't do a LinkedIn Live. But anyways, enjoy your Friday. Enjoy the rest of your weekend. If you have any questions, you can send them to me. I know that a lot of times the tax questions are a bit private questions, so please feel free to send it to me and I'll be happy to answer. But have a good weekend. Thank you.